Hello friends, welcome back to the channel, and in today's video I'm going to do an update regarding about my 10,000 small account challenge. So this video is actually recorded a bit later on, rather than on the 15th, as I'm currently overseas. So let's dive right into the sharing. So just to share, why am I sharing this? The goal itself of this account is actually to grow this account by 50% within a single year. And I want to use this example just to inspire small account investors so that they know that usually using even a small account, you can actually start investing towards financial independence. Third thing, I want to show you the step by step on the things that I do. And of course, lastly, to share some of my insight that I'm seeing in the market as of now. So I started this account on the 15th June 2025 with 10,000, and last month value on the 15th itself is actually 14,170, and today's market based on the screenshot I did was on the 16th and 17th, so the amount itself is actually on the 14,254. So out of this amount, $828 is actually my rewards credit, and lastly the profits from the stock and options trade is about 3,426. And this is actually on the 9-month milestone, so another 3 more months to hit the 1 year mark. So as of now, based on this return, is actually approximately about $380 per month. And if today, oops, I haven't fixed this. So if let's say today, in order to get the 380 plus per month, based on the 1.5%, I will actually require about 304K in a lump sum basis. So based on this current screenshot, which I took on the 17th, okay, this is actually the account value of 14,256, and as of now, my cash amount is actually at 4,009. So if you have been following along on my journey, right, you will have noticed that the cash component itself is still very strong, but right now slowly it has been dipping down because of the recent war issue with regards to US, Israel, Iran. And this created a bit of uncertainty in the market, which allows me to get some opportunities to do a bit of buy-in. So I have actually deployed some of my cash during this period. Okay, looking at this, let's say in terms of the performance. So the orange line over here is actually the stock market performance, sorry, my portfolio performance as of now. And as of now, I think the current two market itself that is actually above the performance of my portfolio is actually the Japanese market and the Kospi. So other than that, actually the S&P 500 and the Nasdaq itself is actually underperforming the market because I think recently there's been a bit of a drawdown. Then what happened right now is that performance, even though is above the S&P 500, but still not too ideal due to the fact that, in fact, I think there are some things that I can do better to enhance the overall profit margins. Okay, so over here, this is actually the past 2 months for January and February. February on last month when I was doing the update on the 15th, I was actually also on the negative position, but I managed to get back up to a positive 2.8%. So March or as of now, market itself has been coming down. I'm actually facing a bit of deficit on this month. So let's see how this month works, and by the end of next month, how is the overall performance. Okay, for my trades as of now, I actually added a bit of positions to my QQQM and VOO. So what happened itself is that I noticed that there's a bit of buying opportunities due to the drawdown, and at the same time, I did have two stop loss for my trades on the XSP, which is actually on the SPY market. Because market has been coming down, so it hit my stop loss position, and I do not want to risk it to overrun the risk that I actually exposed on the trades itself. So I took a stop loss on two of those trades, but I have some new trades added on to this current portfolio, which is previously I haven't been trading this at all. I am seeing quite a bit of surge on energy, and hence I actually did some vertical spreads on XLE, which is actually on the energy sector. Other than that itself, I didn't really add on to other positions, more of like consolidating my gold trades, my XLE, and at the same time adding on to the stock portfolio for my VOO. Okay, so looking at this, right, is actually the price action for the chart last month. Last month, you can see that there's actually a few times when the price actually went below the 50 EMA, and then it bounced back up, and then it goes back below the 50 EMA again. But if you are looking at the chart today, you definitely can see that there's a trend break. So this trend break, basically what it means is that the price has been staying quite a few days below the 50 EMA. And generally, this is a bearish sign for the market in terms of the overall regime. Hence, I'm playing a bit more defensive during this period of time. So what I'm trying to do is that I'm trying to make sure that I do not want to over my portfolio and get it overexposed to risk. So playing a bit more defensive until the price action can show me that the candle price can hold above the 50 EMA, and that will be the period of time that I will start to become more bullish again. So noteworthy news, just to take note, because as of now, I think the overall concern of the market, on top of what is happening with the war between US, Iran, Israel, I think what is more important is actually the price of oil. Because if let's say if today we are looking at oil prices surging above like $100 per barrel, if it keeps on surging, ultimately it will affect in terms of the inflation. And if let's say inflation market, in terms of inflation, it keeps on going up, this itself will affect the decision making of the US Fed, whether will they be cutting any rates at all for this year. As of now, I think what they are pricing in is one rate cut for this year. And if let's say inflation is going to go up, we might be even not able to get that one rate cut, and that itself will affect the overall sentiment of the market. Hence, I'm going to keep a close look on the price of oil and how does this lead to the core PCE. And lastly, this itself will actually indicate whether the Fed itself will continue to cut rates. So that will be all for now. But one thing I want to share with you lastly is the lessons that you can pick up from here. So if you're not following me on my IG Instagram, right, this is actually my Instagram handle. Okay, what we are looking as of now is that we do see that the market is breaking trend. But even though breaking trend itself, right, there's still way to make profits, because generally for options trade, you can trade on the upside or the downside. So of course, if you're a buy and hold investor, this doesn't really apply, but this is definitely some opportunities that you can keep a lookout for to buy stocks that is on a cheaper price due to the pullback. And it's very important to ride the trend rather than going against the trend. Meaning, let's say if you are someone that trade options, you only want to trade the bullish strategy in a bullish regime, and you do not want to trade a bullish trade strategy, right, in a bearish regime. So this is something that you have to take note if you are somebody that is trading the market. So that will be all for today, and if you like videos like this, feel free to hit on the subscribe and like button so that more videos like this will be recommended to you. So that will be all for today, and I'll see you in the next video soon.